All right, welcome back, everybody. Some breaking news for you this morning from Target. The company is announcing a big change. The longtime CEO, Brian Cornell, is going to be leaving the top job as of February 1st of next year, and he will become the executive chair of the board of directors. He's going to be replaced as CEO by Target's chief operating officer, Michael Fidelki, who was elected unanimously by the board. Now, this news does come as Target reports its second quarter results this morning. If you're looking at those numbers, earnings and revenue both beating the street's expectations. Earnings per share came in at $2.05 a share. That was better than the $2.03 the street was expecting. Revenue came in at $25.21 billion, and that was slightly better than the $24.93 billion consensus on that. Comp store sales were down for the second quarter. They were down by 1.9%, but that wasn't as bad as the 3% drop the street had been expecting. If you're looking at the stock right now, it's off by about 1.25%. Make that 3% in the knee-jerk reaction.
11th straight quarter of flat or falling sales.
The bigger problem that they have is they have 6 months in a row of declining traffic coming into the company, too, and that's been a big issue. I did get the chance to speak to both Brian Cornell and the COO, Michael Fidelki, about this. They say they're encouraged by the progress that was made in the second quarter, but they also both admit they have a lot of work to do when it comes to this. If you look over long-term stock charts, you can see what's happened with this. Year to date, that stock is now down by about 27%. If you were to compare that to the S&P 500, it's up by better than 10%. And if you look at Walmart, particularly at some of the longer-term charts on this, you're going to see some big...
Look at the stock today now. I mean, you would think that a new management change, a lot of times the stock goes up, it's down $9. That's how bad the results are again.
The results are a little better than expected, but I think overall they're not showing the progress that needs to be shown.
The stock's down 60% from its high.
From its all-time high. Let's just take a look. He came in August 12th of 2014. So he's been there 11 years. Over that period of time, Target shares are up by about 80%. But if you were to just put your money in the S&P 500 over that period of time, I think it'd be up by about 230%. If you had invested in Walmart, I think it'd be up by about 310%.
We need longer-term charts than what we're showing right there.
If you go back to when he first started, you're looking at just straight on his
or even from the highs.
No, I know, but just on from
80%,
the day
he started in 2014 to where we are now versus this. But if you go back, hopefully we can. There's a comparison chart, but
for the three,
and then if you just look at a 5, you can see on a 5-year chart how high Target was cranking right after the after the pandemic.
But they have struggled in a lot of ways. The first was they got in trouble with inventories being too heavily stocked when things slowed down after the pandemic. And then they've had a lot of issues. I did ask them specifically if they thought the reason for the traffic slowdown was because of what they've seen with the protests, both the woke and anti-woke protests that have gone off in different sides. They've had both sides that have come to them and protested on these issues. And then other people say if it's not that, it's just retail basics that they've fallen behind on some of these issues. Both of them say that there's a lot of work that needs to be done and that they've been disappointed over by what they've seen over the last 3 years as well. Yeah. Look, they do have two different things that are going on. They're trying to maintain prices in the face of tariffs that they are hit a little harder by based on where their sourcing is and based on just the idea that there's more fashion items that come through Target. So they've gotten hit pretty hard by some of those.
It was 80%.
It was 80% until now because it just dropped 10% on this news.
20. Since it says up 61.
No, I mean today.
But the gain since
since it took over because we were running the numbers right before.
Yeah, if you got problems, if you've got organic problems with the company, and then you get, that
external problems,
all that stuff,
kind of come into
all that noise, and it was loud. It was loud noise.
It was conservatives who were upset and were boycotting, and then when they had some success with getting some of the pride things taken out of the store, when they had some rollbacks of the DEI movements, then you had the other side getting upset.
That's the narrative, but it's the same with Bud Light. They actually said that it's not that the overall population stopped drinking Bud Light. It's that when they folded to the pressure that all the people that are pro whatever that commercial was, that they stopped, and that's got to be a lot less than just the overall.
Yeah, look, traffic has been an issue there. They say that what they're going to do is try and maintain prices, but that could put a threat to operating margins. Now, their operating margins are down from what they were a year ago, a little better than the street had been anticipating. But right now, it looks like they are eating some of the tariff increases themselves to try and help bring traffic back.
What do we know? What do we know about Fidelki? He's a long-time employee,
He's been there for
right?
more than 20 years. He started out as an intern between his first and second year in business school at Kellogg. He has done just about everything.
Probably
here.
young if he.
He is relatively young. He
in his 40s.
I don't know if he's in his 40s, but 50 at the most. Yeah,
okay.
but he is at least 15 years younger than Brian Cornell. He was an engineer at Iowa. Then he went to the Kellogg School of Business. He's done HR there. He's worked in stores. He has worked just about every department of the business, and he has most recently been in charge of trying to look for overall initiatives to bring down prices and to try and maintain efficiency at the company as well. Said he fell in love with Target after his first year of being there, and that's why he stuck around and stayed. But again, you see the street's reaction to this. Stock is off by about 8.5%.